But as far as the headline number is concerned, Harm, a significant downside surprise.
Well, that depends, right? I mean, I think the whistle number has been very low. You saw maybe yesterday the Atlanta Fed revised down their GDP nowcast to only 0.2. So I think there was even a fear that we get a flat number, and if everything would have gone wrong, it might have been negative. So yeah, it is weaker than we thought, weaker than consensus thought, but it's not the worst case scenario. And I mean, if we just look back over the last 5 years or so, first quarter GDP growth has averaged 0.9% versus 2.4% for the remaining 3 quarters. So there's something wrong with this first quarter GDP print. I mean, if just to quote Stan Fisher maybe on this, he said there's something going on with the data that we do not quite understand, and I think that is true. So it is a negative surprise, but I'm not worried.
Jim?
Yeah, so I think there are seasonality factors for sure at play, but as we were saying, inventories and consumption were certainly down. I think some of the bright spots could come from the business investing side, residential investing, and potentially even exports. And I don't think that the balance was enough. Here's the good news. Going into the second quarter, the headwinds of consumption and also inventories is supposed to reverse. You're still supposed to have the business investing, particularly in the gas and oil and drilling businesses, and you put that with a backdrop of still decent global growth, you could get a second quarter GDP at 3.8%, and that's what Morgan Stanley's forecasting.
You mentioned inventories. Inventories subtracting 0.93 percentage points from the first quarter GDP read. Did you expect that as well, Harm?
Yeah, we had a big negative from inventories. And yeah, as Jim said, the good thing about inventories is they're usually correcting themselves in the next quarter. So inventories will probably support GDP growth, and we as well have a pretty strong rebound for the second quarter.
The ability to get 3 percentage points GDP annualized continually out of this economy, Harm, what's the potential of that actually happening?
We talk about 1 quarter or for a long period?
No, I'm talking about for a long period, getting back to a 3 handle.
No, I mean, for a long period, you need to increase either the increase in population or the labor force and or productivity. So right with that immigration politics, we are not turning the increase in the labor force around to the positive, at least not. And productivity certainly needs more investment on the education side, and we are moving in the wrong direction here, and we need a rebound in CapEx.